and make sure it goes straight 420. But okay, we're gonna make sure the shoot goes exactly how it's meant to. Yeah, we're back on YouTube, guys, with another hot video. So if you're new to our channel, don't forget to hit the like button and subscribe. Yeah.
So yeah, guys, the reason we've been less active this year is because we've been a lot busier than we were the previous years. However, we don't want to stop what we're doing, meaning we want to keep on creating content, we want to keep on motivating people, helping our loyal subscribers out there. Expect more videos coming this year.
Yeah, we definitely don't want to abandon our audience, guys. So the reason we want to basically come back stronger is because we basically went back and checked the impact we actually had on the Forex industry, and we can see that it's massive.
And for those who are new to our channel, man, make sure you go check our previous videos, go over the playlist. Make sure to do offer free content, offer for beginners, for intermediate people, and also professional traders as well.
So now the reason we created this video, guys, is to basically make an update on what's going on and also give you a lesson on top of that as well, and basically get to engage more with the audience.
Free content, free knowledge. That's what we're all about, man. FS Go.
I remember when we started with Forex, we went to YouTube and we checked Forex on YouTube, and we saw that there was a lot of negativity, right? And if you know us personally, we know that we're positive people, we always have positive vibes. And we thought of how about we bring some positivity into the Forex industry, especially here in YouTube. So that's how we did then. We started giving out free content, we started helping out more people, and we're seeing that the more we do, the more we improve other people's trading lives, basically. So now, once I started going through YouTube and checking out people, I've never seen people actually showing the backside of Forex, apart from just being trading.
How do you go by day-to-day basis being a Forex trader? So a lot of people don't usually show you what do they do besides trading, like what do you do if you're off markets. If you're not actually
so what we're trying to do with this channel is we're trying to show a behind the scenes of what we do to basically be able to have the trades that we have now. And
then also another enlightenment for those people who are strictly going to want Forex, we have now opened a separate YouTube channel whereby we'll be posting free content like tips, market insights, everyday analysis, weekly scopes. Basically, you'll see the channel will pop out right here.
So basically we have two separate channels now. It's going to be a channel for behind the scenes. That's the thing we're going to be doing now, basically being able to engage with the audience, get to know more about our lives. And we're going to have another channel that's going to be strictly just analysis, Forex. If you want to learn about Forex, we're going to have a channel strictly for that. So now, moving into the video that we're going to do today, we want to firstly start with you guys in terms of how we start our morning routine, how we go about our daily lives, and we're going to take you to the office. We're going to give you guys a hot, nice lesson. I believe it's going to help you a lot. So be sure to watch the entire video. And also once we close the video, we're going to leave you guys also with the hot tips. So be sure to check it out. Yes, sir.
Hi everyone, this is FS Go. So basically today, guys, I want to give you an introduction into technical analysis, and I strongly believe that this will help a lot of traders out there. So basically, guys, in Forex trading we have two things. Number one, we have how to trade. Secondly, we have how to grow an account. These are two different factors. They don't mean the same thing. But today I'm going to focus on this one, how to trade. To understand on how to trade, you must understand on how to approach the market, how to read the charts, and how to better predict your next move. So in order for you to understand that, you must understand technical analysis, which is composed of price action trading. So what is price action? Price action is composed of volatility movement, which is caused by buyers and sellers. Meaning, every time you see the normal market of buying and selling, this is called a volatility movement. These are the buyers, these are the sellers, buying and selling every day. Okay? So now, the problem in Forex trading is that there's a lot of information, however, it's unstructured. So we found a way that there's a gap, meaning people don't know where to start or how to approach learning Forex. So we saw that the best way to start is to start at trends. So meaning I'm going to show you first on how to identify trends. So first of all, ask yourself, how many trends do we have? We have 3 types of trends. We have an uptrend, a downtrend, and lastly, a consolidation trend. We're gonna only focus on uptrend and a downtrend. So before we get there, I'm gonna show you on how to identify an uptrend and a downtrend, right? So sharp, what is an uptrend? In an uptrend, we're gonna focus on what? A buy trend. An uptrend is the same thing as a buy trend. Secondly, we have a downtrend. You can think of it also as what? A sell trend. Before we get there, let me show you what is a consolidation trend. Every time you see a trend that has no overall direction, this is a consolidation trend, meaning it doesn't overall go for a buy or overall go for a sell. It's just going straight, you just buying and selling. But however, I'm going to focus on an uptrend and a downtrend. So let me continue. So firstly, let's focus on an uptrend. What is an uptrend? In order for you to understand how to identify an uptrend, you must focus on what? Highs. In an uptrend, we have higher high and higher low. So this is an illustration of how an uptrend is going to look like. At the top here will be our higher highs. At the bottom here will be our higher lows. Why do we call this our higher highs? Let me show you why. This is the high part of the trend, and each high is higher than the previous one, hence higher high. Down here, this is the low part of the trend, but each high is still higher than the previous one, hence higher low and this higher high. Secondly, I'm going to show you how to focus on what? Lows, meaning a downtrend. To understand a downtrend, you must know what is composed of. We have lower high and lower low. So this is also an illustration of what is a downtrend. At the top here, we have the high part of the trend, which is the lower highs. Each low is lower than the previous one, however, this is the high part. Down here, this is the low part of the trend, and each low is still lower than the previous one. So this is how to identify an uptrend, and this is how to identify a downtrend. Okay? So now that I just showed you how to identify an uptrend and a downtrend, I want to show you how to use the information that I just showed you. So let me wipe off the board here. Secondly, we have what? We have important terminologies. These are Forex jargons. This is the language that Forex traders use to better understand or better predict the market. Firstly, we have what? Impulse move. What is impulse move? Impulse move is an overall direction of the trend. Meaning, when you understand impulse move, you should approach it as a swing trade. What is swing trading? A swing trading is when you hold a trade for more than 2 days or even weeks. However, it has a limit. You cannot hold it forever. Secondly, we have a correction, a pullback, a retest, and a retracement. All these words represent the same thing. However, I'm going to focus only on using correction. So, what is a correction? What is a retest or a pullback or a retracement? What that is what we call a short-term reversal in a trend. An impulse move is an overall direction, and a correction would be a short-term reversal. Meaning, to approach the correction side, you should understand that it would be falling under scalping trading. Meaning that you usually trade using hours or days, but not more than 2 days. The aim is to not hold it longer because it's not a swing trade. So let me show you an understanding of what I mean by this, right? So this would be our buy trend, right? We have higher highs at the top, higher lows at the bottom, right? And this would be how the market is structured. So what is our impulse move? What is our correction? In order for you to understand and ask yourself questions first. What is an impulse move? Overall direction of the trend. So first of all, what do you think would be the overall direction of this trend? So this is what? Our uptrend. Our uptrend overall direction goes to being a buy. So that is what is an uptrend, meaning our impulse move would be a buy because it's the overall direction. To enter a buy here, that means you can hold it for more than 2 days or even weeks and still be in profits. That is why it's an impulse move. So what would be the correction here? Our correction will obviously be a sell. Meaning to enter a sell is correction. It's a short-term reversal in an overall buy trend. To enter a sell here, you must know that you must exit down here. Because if you enter your sell here and you do not exit here, you will be in losses. Hence, it's important for you to know whether you're entering a trade for a short term or you're entering a trade for a long term. Hence, we have an impulse move and secondly, a correction. However, I've been saying that you must know when to enter, when to exit. So right now I want to show you guys how to know exactly when to enter and when to exit. For you to know that, you should understand we have two things in forex trading. No strategy can be formed without these two things. Firstly, we have what? Support. Secondly, we have resistance. What is support? What is resistance? In order for you to understand what support is that you should understand that support represents buys, and to approach support, you should think of it as a floor. Meaning right now we're on the floor. We should always be above, never below. The market is always supported to go up, hence it's a support. Secondly, we have a resistance. What is a resistance? A resistance represents sellers. Meaning we want to show you that there's a selling capacity. Think of it as a ceiling. What's happening currently? We're always below it. The market is always resisted from going above this point. That is why we call it a what? A resistance. So that is about support, and this is a resistance. Meaning those are the turning points in the market or reversals in the market. Let me show you what I mean by that. Let me wipe up the board. So sharp, man. So I said these are turning points. Now let's say, for example, this is just the normal market. And then you ask yourself, how do you go about reading this? So first of all, what do you see? We see reversals or turning points in the market, right? So first of all, just mark the turning points in the market. Just simply mark them. And after marking them, it's for you to identify what are those turning points representing to you. Just connect the dot and connect the dot down here. So what would this one be? First of all, we have two types of support and resistances. We have a vertical support and resistance and a horizontal support and resistance. This right here would be our vertical resistance. We would call this an uptrending resistance, and we would call this an uptrending support. Reason being, every time the market reaches this point, it's always resisted from going above. Every time. When you see this turning point, the market is resisted from going above. Down here, the market is supported going up. Supported. Remember, we sell at the resistance, we buy at support. That means we buy down here and we sell up here. So the reason we're saying there's an uptrending resistance is because this is an uptrend and this is the resistance in uptrend. So however, this is only the vertical ones. I want to show you now the horizontal ones. In this very same chart, try to connect the lines horizontally so this will be the first horizontal line, the second one, and this will hopefully be the third one. So we have both the vertical support and resistance and the horizontal support and resistances. So now, why am I showing this? I want to show you this because in order for you to understand how to properly understand Forex is that we have types of probabilities in Forex trading. We have low probability and high probability. So firstly, you must know whether you enter into a trade, is it a low probability or a high probability. So now let me give you an example. Let's say you want to enter a trade, you want to enter a buy. Before you enter that buy, you see that you missed the opportunity to enter a buy down here. When you arrive, the market is currently at this point, and you still want to enter the buy. Why? Because we're from a support, and we know that at a support we buy, right? So fine, you enter your buy here, this would be low probability. Why is this low probability? You have only one confirmation to say that this is your buy. You enter your buy here, this is horizontal support or resistance. The market would first turn here, go back down before going back up. Hence, it's just one factor. So what you need to have is that you must understand that in order for your probability to be higher, you need more than one confirmation. So up here, let's say you wait for the market to reach this point here. First of all, there's two probabilities. We have the first probability saying this is the first resistance, the vertical one, and also the horizontal one. Meaning, this entry here would be a high probability. Why? There's more than one confirmation saying that it's a sell. Hence, it's a high probability. So basically, I want to show you guys how to better understand that you should follow high probability trades more than low probability trades. Okay? So anyway, let's continue with the lesson. I just showed you on how to go about entering your probabilities, how to understanding an impulse move, and also how to understanding a correction. I want to show you a chapter that I'm pretty sure you have never heard about. This chapter is not that much known, however, it's very crucial for your understanding. We call this trends in trends. This is the last chapter I want to show you guys today. It's very important. Many people don't even know about it. So you ask yourself, how do you go about approaching how to apply trends in trends? To understand that, you should apply something that we call a reverse pyramid. To understand reverse pyramid is the way of you trying to analyze the market. So basically, how do you go about that? It goes from big to small. Meaning when you analyze, you must start from a weekly time frame, go to daily, 4 hours, 30, however, just go from big to small. Why am I showing you this? Let me show you what I'm saying there. I remember I said this in the beginning. I said we have what? We have an impulse move, we have a correction. We have a swing trading and we have a scalping trading. I said both of them have limits. So first of all, this would be our weekly analysis, and the market ranges in this manner. And this would be our daily analysis. So the dangers of a person who only analyzes up to daily would be this factor. So this is a buy trend, right? I said if you have a buy in a buy trend, you can hold it for more than 2 days. So a person will come, enter a buy here, hold it for more than 2 days and still win profits. However, when you arrive, you come, you analyze, you see a buy trend, you enter a buy, you go away. When you come back, your account is blown. Why? It's because you don't understand that you sometimes enter a buy at the end of the buy trend. Everything has a limit. Even a swing trade has a limit. If I enter a trade of a buy in a buy trend, I must know when to enter and when to exit. Same way as I know when to enter a sell in a buy trend, I must know when to enter and when to exit. Why? Because this is a buy trend in an overall sell trend. Hence we say trends in trend. So meaning you should know that when you enter a buy, you must have an exit point. When you enter a sell, you must have an exit point. So basically guys, hopefully someone benefited from this. This FS Gold, your mentor, signing out. Yes sir.
That was a pretty good lesson though.
Yeah.
Making sure every time we give them something that's like
Definitely.
Yeah, it works every time for me.
Yeah, man. You know what? Yeah. Easy concepts, easy things.
Making this far into the video, guys, we really appreciate you a lot. It means if you made it this far into the video, you actually do like and appreciate our content.
Yeah.
So thanks for that.
Thank you guys. And also
we wanted to leave you guys with a bonus tip, remember? So yeah, what the bonus tip was, it's actually something that we used to do that was wrong. So when we used to trade before, we used to trade like chart zombies. What a chart zombie is when you just trade, sleep, eat and repeat.
Yeah,
like
that is basically a recipe for failure.
Yeah, man, that's the fastest way to lose in the forex industry, guys. You just used to be chart zombies and zoom out the screen the entire day. And that's how the forex market actually gets to work.
Basically, we're trying to now show you how to spend time on and off charts, because there's time to be on the charts and there's time to be off the charts.
Yeah. So when you trade, you have to have times that you're gonna be analyzing, enter your trades, and let your trades run. Like don't disturb your trades. So that's basically the routine in terms of how to trade.
Yeah.
And those who are more interested into the routine, we're gonna leave the routine somewhere around here.
Yeah, you can just check this and just structure your day, like see how you can go about to saying when do you enter your trades, analyze when do you enter your trades. Basically you must have planned results because you must have planned trades.
Yeah, so don't forget guys, the most important thing that you need to do when you trade Forex is you need to also have a life.
Yeah.
Don't become a chat zombie, because that's the fastest way to lose in the Forex industry.
Yeah. And my last tip to the loyal supporters and loyal fans that we have is, guys, if you want to be successful, this is the recipe you must follow, man. No matter what niche that you're following, always be consistent.
Yeah.
Always be dedicated. Treat whatever you're treating as if it's like it's a job. It's all that you have. It's all that you need. Because if you're playing with it, someone's going to take it and do something with it. Never play with whatever you got, man. Take it serious. Don't give up. Keep on pushing.
Yeah, and for those who made it this far, don't forget, guys, we actually created another YouTube channel that's going to be strictly for analysis and giving you guys some free tips, free lessons. So I'm going to leave the link here. Don't forget to subscribe. Next week, we're uploading content throughout. So be sure to check it out.
Yes, sir.